Welcome to TradersArmy.com, defending your right to build wealth and preserve capital for generations to come. Good morning, everybody. Welcome to today's edition of the Daily Market Commentary. I'm your host, Chuck Fulkerson. It is a Tuesday morning after we saw a little bit of a shakeup yesterday in the markets as the S&P, NASDAQ, and Russell all broke through on their breakdowns, and then gold broke through on its breakup. So if you're new to the channel, do me a favor, click the subscribe button, hit the notification bell so you get the alerts. If you're not new to the channel, do me a favor, click the little like button down below. Let the algorithms know that a human is there. It won't take you more than a second, but it does matter. All right, let's go ahead and dive right in. S&P this morning down 11.5 points, kicking off the day. Yesterday, when we were recording the DMC, we were talking about the fact that we were down about 20 points after a pretty strong breakdown in the overnight sessions, and so price continued to fall. But we had spoken yesterday about removing this buy area, this area of demand. Now, the reason that we removed that demand area was because we were coming down into it, and we were seeing that there was a fair amount of momentum in the other markets. And if you notice, what we did was in front of that demand area, whether you removed it or not during the DMC, what you notice right away is the fact that we started basing sideways in front of the level. And for those of you that listen regularly on the DMC, we talk about the fact that the kiss of death is going sideways before a level, right? That is the kiss of death for a level, is to base sideways in front of it. So now we saw that that breakdown occurred, and we got a really nice little move away, and then it kind of chopped sideways for a few hours, and then in the overnight we've proceeded to move down. Really, it's come down. I'm recording this about 4:30 a.m. Central Time. In the last 30 minutes, we've seen a pretty strong move down as well, about 13 points in the last hour. Well, the last 30 minutes actually, that we've seen price continue to fall. So odds are that we're going to see price continuation in that fall. Same thing showed yesterday. I don't normally show the Russell during the daily market commentary, but we saw the exact same breakout occur in the Russell, and we saw it as well in the NASDAQ. So both of the levels, all of the levels that we indicated yesterday. Now the NASDAQ as well, we talked about removing this area because there was the breakdown into this zone. It was chopping along sideways in front of it, right? And so the breakdown occurred, and we're seeing price continue to fall. Now, where does it fall to? So looking at our markets, whether I'm using the S&P or the NASDAQ on a 4-hour chart, we had seen price start to really come up to this region, but my gut had told me I believe that we were going to roll over, right? We had a little bit of demand in here that could have been a reversal point, but everything was pointing to the fact that we would anticipate a bit of a rollover. So now, if we start to rally higher, I mean, look at how clean this little level is here on a 4-hour chart. Now, that's not a great time of day for that to be a level, but it is a fairly clean zone on a 4-hour, and I don't think you've got any decent demand until down here, right? Now, the time of day of this area is horrible. This is a terrible time of day. 9 o'clock in the evening is certainly not a level, not a time of day to lean on. As far as levels go, S&P doesn't really have any quality level, that we're coming close to either. So both markets have really decent opportunities for price to continue to go lower. And when I look at these markets, going even to the daily, I believe that we're at a bit of a fairly important inflection point when I look at this, because we put in that, we started to put in these higher swing lows, higher swing highs, got to a new all-time high, and now we're falling off of that next piece, right? So the fact that we set an all-time high in here, dropped away from it, set a new all-time high, which is very typical, by the way. After setting a new all-time high, it's very typical for price to sell off a bit. But now we're showing an additional amount of weakness and unable to come back into that next level. I think we're at a bit of an inflection point in these markets overall. From a much bigger perspective, looking at the weekly time period, it's the fact that we have a really long bullish candlestick last week, but have had no follow through on that. Right, this weekly candlestick from last week is a really long bullish candlestick with this super long tail, but we're unable to have any follow through because you need to get higher than the prior week's high in order to have any follow through. That's, to me, a very telltale sign that the buyers tried to come in and were unable to really get any momentum in, right? So unless we close higher than this week's high, I'm really going to start changing my overall big picture sentiment from a technical perspective. From a fundamental perspective, we haven't really changed much, but the technical perspective, not being unable to get above the high for the week last week, I think is an important concept. All right, so what else am I looking for today? Well, I think that we may have a little, if we get a reversal chance, this little wick over wick area here on the 60-minute chart, I think is a really decent area for reversal. I'm not sure we're going to get it. Possibly, I think there's a better chance that we'll continue to trade down throughout the day. On a 15-minute chart, if you can see, we had our little reversal right in here, which was the area that was acting as support in the past. So I'm going to wrap my lines around here just in case we get a rally up this morning to get us another bite at the apple, if you will, and another chance back at that zone. NASDAQ, like I said, looks very similar. Next area of demand wouldn't be until somewhere down in here. But we don't really have much to play off of on that one. Crude oil. So looking at crude, we see a potential breakout to the upside in crude somewhere up in here. Yesterday we talked about the fact that we had a breakdown in the overnight hours, but that we were starting to see some price rally up, so we took our stop, moved it to break even, and for a good reason, right, as price rallied right back up. So still have a breakout long potential area up in here. So let's see what crude does for the rest of the day today. Not a whole lot else I want to add to crude. Gold, we had a breakout to the upside. So if you took the breakout trade, you had a little move up, and you notice 1, 2, 3, 4, 5, 6. After 6 candles, you can move your stop to break even. Well, price didn't come back to the break even point after that, and we've gotten another move away. Now, if you caught that breakout, phenomenal. Leave it in the comment section down below. There's also this potential reversal point right in here. Now, this is around midnight, which is typically a pretty good time of day for gold reversal trades. And so let's see if we get a decent reversal back into this level. Looking at bonds and currency markets. So in the ZN, we are still in between our levels in the ZN. Not a whole lot has occurred as we saw, the bonds get a little bit of a rally, a little bit of a push higher yesterday, but still very much firmly entrenched between our levels of demand and supply. And then in the Aussie, we had a sell-off from our Aussie level of the Sunday night. Got a really nice trade out of there. And then I think it sets up for a potential breakdown below this line here. So we're right now in between these two areas. I'm going to switch this top level here to a confirmation style in case we retest and come back into this zone today. In the euro, now the euro I had set up for a potential reversal off of this strong move down. We came right into there, had a little bit of basing in front, and then blew right through the level. So that euro level did not work out at all. And now the euro's in a sideways, very sideways, tight range. So I'm just not going to look for trades. I'm going to hold off on the euro until we break out of this range. Canadian dollar had a little bit of a breakdown candidate here in the Canadian dollar. For those of you that wanted to jump in and take it, your stop would go above your prior pivot, which is right in here. So there's a chance that if you did take this Canadian dollar level, you get stopped out by just a tick, which is always the worst because now it's kind of continued its next leg down. So one of the most frustrating things is to get stopped out, especially by a tick, which is exactly what we saw here, right? It came up, kissed your stop, and then blew right back down, unfortunately. And remember, those things happen, right? That little loss is more than made up for in what happened in the equities markets and the gold markets yesterday. So, I don't really have anything to add on these. None of these are quality enough levels for me to lean on. If I go to a 15-minute chart, nothing in there is singing like a canary, telling me the trade that I need to take. And so I'm going to leave this one alone as well. Kind of a common theme we're seeing in some of those currency markets, right, is the stay away, leave me alone theme. We see it again in the Great British Pound and the Japanese yen. So really this is all spearheaded by the dollar. Not a whole lot in here that I want to trade off of. So if I'm going to trade currencies, today might be a better day to look for the exotics. As I'm remember now, if you go to a 5-minute chart, you may find something, but I'm not willing to do that. I want to stick to higher time frames. If I start to go into 5 minutes and 3-minute charts and tick charts, things get a little bit more squirrely. And so we did actually get the breakout in the Japanese yen and got a little bit of a movement, but not enough to really make it worthwhile. And frankly, if you did get into that, you probably move your stop to break even at some point, and you're sitting at a little bit of a return. So overall, these markets are definitely continuing sideways in a currency market. So there's no reason to force a currency position. The better trades were in our equity markets, and they were all the breakdown positions. And then coming for today, what's the reversal, right? What's my reversal potential and opportunity? And you got a little bit of level here on the 15-minute, and then another one up here on the 60. But overall, I'm getting a little bit more bearish, even from a bigger picture perspective, than I have been in the past. Just due to the fact that we're seeing the momentum just weaken, and we were unable to create some new highs with our latest weekly candle. So if you have more interest in learning more about futures, and maybe you're just watching this but you don't really trade futures, we're doing a futures webinar on Wednesday the 14th. So Wednesday the 14th, tomorrow evening. Feel free to join us for our futures webinar. Go to tradersarmy.com/registration to join us, and I will talk to you soon. Hope you have an amazing day. We'll see you.